Assalamu alaikum everyone. I'm Muhammad Rashidul Islam Dev. Today, me and my team member would like to talk about a well-established bank named Signature Bank from USA that has been collapsed recently. And in our presentation, we will point out some important things about this bank and the reasons behind its failure. And in conclusion, we'll try to point out some learnings that we can take from this failure. So let's start our presentation. But before this, let's introduce our team members. They are Mohammad Raihan Ahmed, লিটন হোসাইন, খালেদা খাতুন, মমতাজ খানম, শাকিল হোসেন, আব্দুল আলিম, Mohammad Rashidul Islam Deep, that means me, and Mosammad Chamili Khatun. And this presentation will be presented to our Honorable Sir Shagor Rana Sir, Assistant Professor, Department of Banking and Insurance, University of Russia. So now I would like to call our first presenter, Mohammad Raihan Ahmed, to start our session.
Assalamu alaikum. This is Muhammad Rahan Ahmed. My student ID is 18102371107. Thanks, sir, for giving me a platform to tell something about today's topic. Today, my topic is details about Signature Bank. Signature Bank was an American full-service commercial bank headquartered in New York City and with 40 private client offices in the state of New York, Connecticut, California, Nevada, and North Carolina. Signature Bank was founded in 2001 by former executives and employees of Republic National Bank of New York after its purchases by HSBC. It was founded by Joseph J. DiPaolo, the bank's president and CEO, Scott A. Shai, chairman of the board, and John Chamberlain, vice chairman and director. The bank completed its initial public offering in March 2004 and began trading on the Nasdaq under the symbol of SBNY. Signature Bank had a focus on serves privately owned business, their owners and senior management teams, providing a range of banking products and services tailored to their needs. The bank offers a variety of services including commercial lending, private client banking, personal banking, especially finance and digital payment solution. One of the significance bank's most notable decision was to enter the cryptocurrency industry in 2018. By 2021, cryptocurrency businesses accounted for a significant portion, around 30% of the bank's deposits. This involvement, along with other factors, played a key role in the bank's closure in 2023 by the New York State Department of Financial Service (DFS). That's all from me. Thank you, sir.
Assalamu alaikum. I am Liton Hussain. My student ID 1810333712. Thank you, sir, for giving me a platform. Today, my selected topics is timeline of major events of Signature Bank. Now, I discuss about the timeline. In 2001, Signature Bank is founded in New York City by Joseph D. J. Paulo and Scott A. Shea with the aim of providing banking service to privately owned business and their owners. And in 2006, the bank goes public trading under the symbol of SBNY on the Nasdaq Stock Exchange. In 2010, Signature Bank surpasses 10 billion in assets, marking a significant milestone in its growth. In 2014, the bank expands its presence in the New York metropolitan area by opening its 25th private client banking office in Brooklyn. In 2017, Signature Bank introduced blockchain-based digital payment platform Signet aimed at enhancing the efficiency and security of transactions for its clients. In 2018, the bank crossed 40 billion in its assets, continuing its trajectory of growth and expansion. In 2019, Signature Bank launches a blockchain-based digital assets platform. In 2020, amid the COVID-19 pandemic, Signature Bank plays a crucial role in providing financial support to business through government relief programs. In 2021, Signature Bank exceeds 100 billion, solidifying its position as one of the leading banks in New York and United States. In 2022, Signature Bank continues to innovate financial technology, exploring avenues such as decentralized finance and expanding its digital banking offering to cater the evolving needs of its clients. Thank you, sir.
Assalamu alaikum. Myself Khaleda Khatun. My ID number is 18125371120. Now I will discuss about the timeline of Signature Bank's collapse. On March 8, 2023, Silvergate Bank was closed down. Silvergate Bank was one of the biggest banks who is dealing with cryptocurrency, who is voluntarily began liquidation. The bank's share price to a record low, falling to 5.676% to 4.91, making a 71.56% drop from the beginning of the year. The bank's corporate governance and risk management capabilities keep pace with the did not keep pace with the bank's rapid growth, increasing complexity and involving risk profile. On March 9, 2023, Signature Bank shows its financial position. Perhaps seeking to reassure investors and regulators, Signature Bank sent out a press release noting solid investment ratings, strong liquidity, a high level of capital, and a diversified deposit mix. Signature Bank reiterated its strong, well-diversified financial position and limited digital asset related deposit balance. In the wake of industry developments, on March 10, 2023, Silicon Valley Bank was closed down by the California Department of Financial Protection and Innovation. Signature Bank's stock price closed at $70 on heavy trading, a drop of 79% from February 10, 2022. On March 12, 2023, New York DFS took possession of Signature Bank to protect depositors and appointed the FDIC as the bank's receiver. The FDIC in turn transferred all the deposits and nearly all the assets to Signature Bridge Bank, a full-service bank, a full-service bank operated by the FDIC. While it looked for potential bidders for Signature Bank, on March 19, 2023, the FDIC announced Flagstar Bank, which is a wholly owned subsidiary of New York Community Bancorp, as Signature Bank's acquiring institution for almost all the depositors and some loan portfolio. Around 60 billion USD dollar in loans remained in the FDIC receivership, and the FDIC said it would cover about 4 billion USD dollar in deposits related to digital banking assets. That's all of my presentation topic. Thank you.
Assalamu alaikum. Myself Mumtaz Khanum. My student ID is 1812437 Today my presentation topic is moments of Signature Bank's failure. Silicon Valley Bank has a great impact on falling Signature Bank. Signature Bank fell after the collapse of Silicon Valley Bank. And the next slide is Silicon Valley Bank, or SVB, had been the sixth largest US bank with more than $200 billion in asset and about $175 billion in deposit before it failed. The next slide is the collapse happened for multiple reasons, including a lack of diversification and a classic bank run, where many customers withdraw their deposit due to fears of the bank's solvency. Many of Silicon Valley Bank's depositors were start-up companies. They deposited a large amount of cash from investors because this was in high demand during the pandemic. And that's all for me. And but remaining the presentation to continue my next team member. Thank you, sir. Assalamu alaikum.
Assalamu alaikum. This is Shakil Hussain, and last three digit of my ID is 128. Thank you, our honorable teacher, to give me such opportunity to present myself. Our group member Momotas Khanum already started to describe the moments for Signature Bank's failure. I would like to extend the description further. On Sunday, Signature Bank customer spoke by the sudden collapse of Silicon Valley Bank. As a result, huge number of customers withdrew $10 billion from the Signature banks. This sudden move shocked executive of Signature Banks, a New York-based institution with deep ties to the real estate and legal industries. Mr. Frank, who is the board member, told in a phone interview that we had no indication of problem until we got a deposit run late Friday. The Silicon Valley Bank and Signature Bank was same kind of nature in the sense of they were based on cryptocurrency and startup bank. As a result of the collapse of the Silicon Valley Bank, the customers of signature banks get panicked and they start to withdraw money from their deposit. As a result, on late Sunday, regulator announced that signature bank are collapsed and it was being taken over to protect the depositor and the stability of the US financial system. Those signature banks breakdown stand out because of its connection to the Silicon Valley Bank failure and ensuing fears about the health of the banking sector as a whole. That this was the moment and this was the event when signature banks collapsed. Thank you. That's all from today. I would like to invite our next presenter to continue the presentation.
Assalamu alaikum, sir. My name is Mohammad Rashidul Islam Deep. My student ID is 1810 137151. My previous team members have already discussed the moments of failure of Signature Bank. Now I will discuss some reasons that forced Signature Bank to collapse. Signature Bank was shut down by federal regulator on March 12, 2023. The bank's failure resulted from regulator concern about depositors withdrawing large amount of money after the failure of Silicon Valley Bank and the fear of continued to raise. The federal regulator says Signature Bank customer would get all the deposit back, even the amount that were over $250,000 are uninsured by the Federal Deposit Insurance Corporation. And in April 2023, FDIC report blames Signature's failure on bank mismanagement, a lack of corporate governance, and failure to listen and respond quickly on the advice of FDIC. After this failure of Signature Bank, lots of questions were arised on the FDIC insurance and on their policies. And after this, lots of things are fingered on FDIC's policies as well. That's it. Now I would like to invite my next presenter. Thank you, sir.
Welcome to my presentation. This is Abdul Alim, graduate student, MBA first semester, Department of Banking and Insurance, University of Rajshahi. My student ID is 1810737149. Today, I will discuss about the major reasons of signature bank failure. First of all, management failure to understand the risks of its concentration in the crypto sector. Almost a quarter of its deposit came from the cryptocurrency sector. The New York State Department of Financial Services passed back on a speculation from crypto industry. Signature failed to provide reliable and consistent data as withdrawal requests balloon over the weekend and regulator closed the bank due to its involvement in digital assets, inability to do business in a safe and sound manner. The second reason was uh, an abnormally large share of uninsured deposits. It accounted for 90% of overall deposits at the end of 2022. The third reason was liquidity risks. On March 10, Signature lost 20% of its total deposits in a matter of hours after Silicon Valley Bank was shuttered 2 days earlier, following 42 billion in deposit outflows in a single day. And the last one, lack of adequate Federal Deposit Insurance Corporation oversight. 40% of its positions were vacant, and certain targeted reviews were not completed timely or not at all because of resource shortage. Thank you. That's it from me.
Assalamu alaikum. My name is Mr. Jamili Khatun, role 133. Today I want to discuss what actually we can learn from signature bank collapse. First of all, importance of strong risk management practice. Banks need to have strong risk management practice in place to identify, assess, and mitigate risk effectively. This could include implementing frameworks for managing various types of risk, such as credit risk, market risk, liquidity risk, and operational risk. Then, need for close regulatory oversight. Regulators must maintain close oversight of banks to ensure they are operating in a safe and sound manner. This oversight should include regular monitoring, stress testing, and risk assessment to identify potential issues before they escalate into significant problems. Then impact of external shocks. External shocks such as the COVID-19 pandemic and subsequent government intervention like stimulus check can have a significant impact on banks' operation and stability. Banks need to be prepared to manage increased deposits and change in market condition effectively. Then auditors' role in risk assessment. Auditors play a critical role in assessing a bank's financial health and identifying potential risks. It is essential for auditors to thoroughly examine a bank's financial statement and operation to provide an accurate assessment of its risk profile. Then potential for systemic risk. The collapse of a large bank, like Signature Bank, can have far-reaching implication for the broader financial system. There is a risk of a domino effect where panic is spread to other banks, targeting a wider crisis. Regulators and policymakers need to be vigilant in monitoring for sign of systemic risk and taking swift action to address emerging threats. Then challenge for monetary policy. Bank collapse can pose challenges for monetary policies, particularly in managing inflation and financial instability simultaneously. Central banks may need to adjust their strategies and implement emergency measures to address this challenge effectively. Last one is collaborative efforts for stability. Addressing financial instability requires collaborative efforts between banks, regulators, policymakers, and other stakeholders. By working together, stakeholders can promote financial stability and mitigate the impact of banks' collapse on the broader economy. That's all of my presentation.